good evening, good evening, everybody. How y'all doing? Yes, I miss y'all. I I've been seriously considering bringing back the throwback chart prep and overnight price action videos. I miss y'all, man. Um, for those who don't know, because I just started this yesterday, so it's probably a lot of people who don't know, we are now simulcasting on the tube and on Twitter. Simulcasting on Twitter and YouTube or X, whatever you call it. If you want to call it X, if you want to call it Twitter, you want to call it the Bird app. We're simulcasting on both. If you are tapping in on X, you can comment and I can see your comments. But if I put something in the chat, you can't see what I put in the chat. So if you're on YouTube, you have to be a subscriber to chat. If you don't want to subscribe to my channel, you can watch it on X or Twitter or whatever you without. I guess you would have to be following me to know that I'm going live on there, but you can comment over there on X. Like if you don't want to just sign up on YouTube or log into YouTube and all that, you just want to watch it on X, you can comment on X. I can see your comments. But if you're on YouTube, you have to be signed in and you have to be subscribed to my page. You don't have to be a channel member. People think, hey, I can't comment. It's telling me I have to pay $7.99 a month. You don't have to be a channel member to comment. You have to be a subscriber to comment because all the true blue gang remember when that guy pulled up and let his bird out of the cage. So ever since then, I got it set to subscriber only in the comments, right? You can't interact. Now, with all of that out of the way, let's get into our chart prep. Let's go preparify the charts. Now, looking at what price did today, price it did what I thought it was going to do, but it didn't give me an entry. I know you may look at this and say, hey Tim, there's a nice pull back into a fair value gap there at 950, but that's at 950. I don't trade in between 9:30 and 10 o'clock. I've never traded in between 9:30 and 10 o'clock. Everybody that I've always learned anything about trading from, be it futures or options or whatever, everybody, they used to tell me, hey, chill out for the first 30 minutes to an hour, let the market settle down, and then start doing stuff. So that's what I've always done. I don't know. But it didn't give me any opportunity today. It did exactly what I thought it was going to do, but it didn't give me no entry. So guess what? I didn't get an entry. And, the price action been kind of lackluster. It's been small range. It was a small range for most of the day. Look at this. Matter of fact, let's see what it was from just before. So let's go from like the lowest point right before the New York kill zone up until the highest point of the morning kill zone. 13 and 3/4, less than 14 points of range. On that's lackluster for the ES. Less than 14 points of range. I got to sneeze. Excuse me. Thank you to anybody that said bless you. Less than 14 points. So what's up here, Learning Share? What's going on, Father Legends? Also, if you're on the Bird app and you know what I'm saying, you want to ask a question, I can put yours on the screen too. I can see them. I can answer them. I can do anything. You just can't see if I put anything in the chat. So, speaking of putting anything in the chat, I just had an idea. Instead of just doing a chart prep, I am going to, because I thought about it, because I was like, the market didn't give me anything that I wanted today. I have just decided in my mind of thoughts that I am going to share with anyone who's interested in particularly the ICT concepts and any concept at all that you trade. I am going to share with you how to have a game plan for actually making an entry in the market. Because you heard me say the market did exactly what I thought it was going to do today, right? And that's based off of my analysis, my bias, looking at what price action is doing. Hey, it's more than likely we're going to do this. But I have a strict set of criteria for entering because I trade futures, and futures are very unforgiving if you get in at the wrong time, unless you have a huge stop loss. I don't have a huge stop loss. When I was buying options primarily, I could say, hey, this is what I think price is going to do. If I didn't want to sit in front of the chart, I would just buy time. I would buy my options for like 2 to 3 weeks out and then just let it play out over that day or a couple days and wouldn't worry about it. But when I'm trading futures, I have to have my position closed that day. And if you get in early or get it wrong, futures are very unforgiving. It will slap you upside the head. Now, let me get into this teachable moment. If you are a note takers, take some notes because I'm going to be sharing some very algorithmic conspiracy theory type stuff here. This is going to be all about time and price. Do you know how Michael J. Huddleston always speaks about understanding time and price? The most important thing of algorithmic theory, of ICT concepts, of smart money concepts is time and price. When time meet price, they give birth to opportunity. I just made that up. Let's do it again. When time meets price, they get together. They give birth to opportunity. For anybody who tuned in on Twitter, I'm sorry. This is just normal little Timmy Rogers. You hear me? Gang, can y'all please explain to them that this is just normal little Timmy Rogers? Hey, if you're a notey of the note takers, I know the thing say chart prep. That's what I was going to do, but I just had a thought in the mind of my thoughts, and I was like, hey, I don't want anybody saying, Tim, you're always sharing the good stuff with the gang for the people who pay for the YouTube channel memberships. You be giving them all the good stuff. You be giving them all the videos when you go deep into your mind and show them how to do this. You don't just teach the concepts, and I don't teach anything. You don't just teach the concepts, but you show them how to use it, and you show them what to do, and you show them when to do it, and you show them all the little secret stuff there's no secrets. Michael J. Huddleston has put it all out there on YouTube. And if you don't trade his concepts, you don't have to trade his concepts. If you learn how to read the candles and what they're telling you, you can make up your own concepts. Now, let's get into it. So, price did not give me what I wanted. All right. Now, we're going to go through time, and I'm going to show you when price gives you, we're going to look at the candles and then we'll go from there. Let me hide my drawings. Get off my screen. Get off my screen. Get off my screen. And then if I haven't blabbed your ear off, I'll go back and do my chart prep after we do this lesson of lessons. What's up, Wave Trader? Hey, can y'all still hear me good? I moved my mic back. Let me know if y'all can still hear me good. Put a 1 in the chat. Hey, do this for me. We're going to get started in a second. I'm sorry, Twitter, if y'all ain't used to this. We're going to do this. Do this for me. I found out from some YouTube gurus and experts, as content creators, they send us all these videos on how to make your videos reach more people. I found out that on my live streams, the more interaction that y'all do in the chat, the YouTube algorithm thinks y'all like this stuff, and it shows it to more people because it say, hey, it's very engaging. And people, so we want as many people as possible to get this stuff for the free 99. So y'all just throw stuff in the chat. You know what I'm saying? Just throw stuff in the, just pop stuff in the chat. Hey, this is great. This is good. Oh, this is gold. Just put some heart emojis. Just put anything in the chat and then just share it with people. 4 payments of $197.99. I'll send y'all. Shout out to homie Father Legends. Father Legends is the Spotted Gang member of the year. He got 4 more days. What's the date? He got 4 more days to hold his title. 1, 2, 3, 4, 5. He got 5 more days to hold his title. The Spotted Gang member of the year. But yeah, seriously, just drop stuff in the chat. They said that because I primarily live stream on my channel, and to get the algorithm to think that it's good content and show it to more people, the more y'all interact in the chat, the more they think y'all like it. And then they'll start to show it to other people, and more people can, you know what I'm saying, get exposed to this content for the free 99. I appreciate y'all. Now, let's get into what I was saying. Now, we are going to dive deep into, y'all know, the gang members, y'all already know, I have been in my rabbit hole. And for anybody who don't know what I'm talking about, I have been in my rabbit hole because I've been exposed to some time and price theory stuff that's so crazy. I've been in my rabbit hole. So I'm not going to go too deep into the stuff that I've been into, but I'm going to show how to formulate your plan based off of the concepts. You know what I'm saying? That your analysis. Because a lot of people be like, Tim, I get it. I see the PD arrays, but I just don't know when to enter or how to enter. Very glad you said that. Because this is what we're going to do. Let's pull up us a daily Chizart. These are daily candles, right? These are daily candles here. Looking at these daily candles, okay, we got this is a Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so we got Monday, Tuesday, Wednesday, Thursday, Friday of last week, right? You see, on Monday we came above the high. Tuesday we came above the Monday high. Then Wednesday we took out Tuesday high, and then we dropped, sold off, and came back down into this daily fair value gap. And then Thursday we pushed back up, and Friday we continued to push up. And then this right here was today's trading, meaning earlier today, because this is today that we're in now, and this was the trading from earlier today, right? So that's what was going on with the price. And we're going to say on Friday, based on Friday, on this day right here, Friday, on that day, based off of what we saw happen here on Wednesday when we pulled back into this daily fair value gap, and then Thursday we took off like this, we're going to say, hey, Thursday, we didn't get an opportunity to trade, or maybe Thursday we even traded, right? We even traded on Thursday, right? So Friday, right here, we're going to say from starting Monday, we wanted an opportunity to buy, right? Because we've been bullish. We've wanted an opportunity to buy since Monday, right? We want to buy off of this daily fair value gap down here. When price came down into it, we didn't get an opportunity to buy. We missed it, right? We want to buy there, and then we were targeting a higher high for our destination. We didn't get an opportunity to buy. So Thursday, it blasted off, closed at the high, didn't give us no kind of retracement there. So we like, man, it ain't give me no kind of pullback. You see, Thursday, there's no wick on this candle. So you're like, oh, because we like to buy in discounts, right? It didn't give me opportunity to pull back. But look at Friday. Look at Friday's candle. There's a bottom wick on Friday. So we're going to go into Friday's price action and see, and we're going to formulate, we're going to watch price, and then we're going to walk all the way through what you would have been doing to look for your entry, right? Now, so Friday has a pullback. So we're looking at Friday, right? Let's just highlight Friday. That's the entire time action, price action of Friday highlighted right there inside that box. And we're going to make that box, we're going to make it, what's a pretty color? We're going to make it yellow, so it's not all up in our way. We're going to make it yellow. Okay, so oh, we actually got some people looking on Twitter. I see it says some people on there. Welcome, Twitter people. If you're on Twitter, put a 1 in the chat. It says you're there. Hello, Twitter people. Yellow. Okay, so that's a daily chart. Let's go down to a 4-hour chart, right? 4-hour chart. Yes, yes, yes. This is looking beautiful. For the example we are talking about. This is looking beautiful for the example we are talking about. Okay, now, I'm glad we went back all the way back. Remember we said Sunday. What's good, Sanjay? Remember we said starting the beginning, we was bullish. We wanted to buy off of the daily fair value gap. Looking at the 4-hour chart, look what we got here. Let's go back to the daily. Let's mark this up so we can see everything sort of makes sense. So we're going to take this right here, mark out the daily fair value gap that we wanted to buy off of, and we missed it. Template, daily bullish fair value gap. This interval and below. We want to buy off of that right there. All right. So let's go back to the 4-hour. Okay. On this 4-hour right here. See right there? On this 2 p.m. 4-hour candle, we came back into the daily fair value gap. We said, hey, we missed it. We missed it. We didn't get an opportunity to trade it. Now, for the members in the gang, I'm about to get a little rabbit hole-ish about time and price, but I ain't gonna get too rabbit hole-ish because I don't want to confuse nobody. Now, we're on a 4-hour time frame now. Let's take up some notey notes. Right? Right here, we came down into this BISI right there. Now, let's take us some notey notes because we want to stay on track of things, right? Okay, so on Wednesday, yep, that's the day. Wednesday, the day we said we missed the trade, right? So on Wednesday on the 2 p.m. 4-hour candle. So on Wednesday, 2 p.m. 4-hour candle, right? 4-hour candle. Got a break in market structure. Okay, we got a break in market structure. That's the 6 a.m. candle, right? So we had a break in market structure on the 6 a.m. candle, on the 2 p.m. candle, right? We got another. We took liquidity here, right? That's a 10 a.m. low. That's a 10 a.m. low. And we traded back into a 2 p.m. candle, right? So we had a break in market structure. The low, the sell side candle, the low that we took out was the 6 a.m. low, right? So the 2 p.m. 4-hour candle took out a 6 a.m. 4-hour candle. I ain't gonna keep writing 4-hour candles. We talk about 4-hour low and retraced back to a 2 p.m. BISI. Right. Okay, so on Wednesday, this 2 p.m. 4-hour candle traded back to a 2 p.m. 4-hour BISI, creating a 2 p.m. SIBI, right? Creating a 2 p.m. SIBI. Not you. I didn't say Siri. I was talking, not you. She got some that scared me half to death. I'm like, what? Okay. So stick with me. I know I'm getting rabbit hole-ish, but stick with me. All right. Okay. So Wednesday, 2 p.m., 4-hour candle, breaking market structure to the downside, traded into a 2 p.m. BISI. Remember, Our bias is bullish, right? Our bias is bullish. Okay. Our bias is, you know what? Gang. Remember I told y'all I was gonna make a video about using inversion fair value gaps strictly for the gang. That was gonna be my Christmas present to y'all. A lot of stuff that I'm about to say right now is pretty. I might end up doing just a whole video right here. I don't know, but I'm gonna do a polished version for the gang to give to y'all. Put it in the member section so you have a polished version of it. But it's all this stuff is just in my head. It just lives in here. Okay, the bias is bullish. Don't forget that. And I don't want you to forget that because we're talking about getting a break in market structure bearish here. Our bias is bullish. You always want to remember your bias and where you plan on going. What you're trying to do, right? A bearish break in market structure. Okay. All right. So, and then we traded back into the 2 p.m. Bessie, right? And then we rallied off. We missed it, right? We didn't get a chance to do anything right here. This is Wednesday. It traded into it, and then the market closed, right? That's Wednesday. We didn't get no chance to trade. Thursday, right? We didn't get a chance to trade on Thursday. Right there, we didn't catch anything on this 10 a.m. pullback right there. You know what I'm saying? Notice what this is. This is a 10 a.m. 4-hour candle trading back into a 10 p.m. 4-hour busy. Remember that. Anyway, we didn't get a chance to trade on Thursday, right? We didn't get a chance to trade on Thursday. So Friday is the time that we're looking at how we gonna do so? How we gonna take advantage of this, right? How we gonna take advantage and, you know what I'm saying, try to get us a trade off or do something. Okay, now here you go. So now that we know this right here about the price, what's been going on this week, from the beginning, we've been wanting to find a reason to buy. Our reason for wanting to buy was trying to buy off of this daily fair value gap, right? Tim, that's a really high time. I know, stick with me, right? We missed it here. So now here we coming into Friday, right? So when we come into Friday, right, with our knowledge of what's transpiring thus far, right? Of what's transpiring thus far, right? So now we got our, if you trade the London session, if you trade the New York session, everything is about time and price, right? Everything is about time and price. Now, on Wednesday, the 2 p.m. 4-hour candle broke down. The institutional sponsorship came in and took out the sell side from 6 a.m. Right now, let's get a little bit more rabbit hole-ish so you understand where I'm going. That 6 a.m. candle, what did it start? It started a little rally to take out buy side, right? This rally started on the 6 a.m. candle. Rally started. Don't worry about all this rabbit hole stuff. I'm gonna get to how you use the stuff in a minute. Rally started on 6 a.m. candle, right? Taking out buy side, right? The buy side high that it knocked out was what? It was made at on a 10 p.m. 10 p.m. Right? What did we say the times on the candles were that we took out the sell side? When we dropped here at 2, right? When we dropped it, the 6 o'clock started it, took out buy side. What time did we say these swing lows were? A 10 a.m. and a 10 a.m. So this 6 o'clock took out the 10 o'clock buy side. Then the 2 o'clock dropped, taking out the 10 o'clock sell side. And that 2 o'clock traded into a 2 o'clock BISI. As it traded into that 2 o'clock BISI, it created a 2 o'clock SIBI. It's not by accident. Okay, so now that we see what price has left in the wake, now we're coming into Friday, right? We're coming into Friday. We set a low at 10 p.m. during the Asian, right? During the Asian, set a low at 10 p.m. At 2 a.m., price starts to rally. Price starts to rally at 2 a.m. Before price rally, over here at 2 a.m., it started to rally, creating a BISI, right? Over here, price pulled back at 2 p.m., creating a SIBI. At 2 a.m., price starts to rally, right? We start to rally at 2 a.m. So how can you use that information for the London? Okay. You see, during this week, price has been making significant moves dealing with time and PD arrays, right? Around the 2 o'clock, the 6 o'clock, and the 10 o'clock time frames. Right now, the major PD arrays that it's reacting off of are the 2 o'clock versions. So during the London kill zone, when that 2 o'clock 4-hour candle starts up, you would be looking for an opportunity to strike with your bullish intent. Right over here at 2 o'clock, it didn't give you opportunity to strike with your bullish intent, right? But over here at 2 o'clock, let's highlight this 2 o'clock candle. When did the rally? We started rallying at 2 o'clock, right? So now that you know you're bullish, you are bullish, and you know that price is trading around the time that the PD arrays were created, and you're looking for a reaction. So now let's drop down. These are 4-hour candles. Let's go down to 15 minutes. You know, I like to watch 1 hour, 15 minutes when I'm looking for my setups. So we're going to go here inside 15 minutes. So this is at 2 a.m. and this is over here at 6 a.m. All right. So looking at price here, starting at 6, we did that. Let's find midnight. This is midnight right here. All right. So here we are at midnight right there. All right. This is your midnight price. This is where midnight opened right here. I'll put that all the way over to there. All right. Our London kill zone started. We're just gonna highlight the whole kill zone there, then put it at 5. Boom. That's our London kill zone right there. That's our entire London kill zone inside that blue. All right. So now midnight, we drop down and we take out, we run sell side. Midnight, we drop down, we run sell side. Right? We take out sell side right there. Boom. Take sell side at 1 a.m. Right. Once we take sell side, all right, we take sell side, and then we rally past that SIBI right there. Right. So we come down, take out this sell side right there. Remember, we're bullish. right? We're bullish and we have come down, and we're Thursday. Let's go back. Let's get our bearing together for anybody who, might be getting lost. We want everybody to keep their bearing. We want everyone to keep their bearings. Keep their wit about them. Remember, this daily fair value gap right here is what we came off of, right? This is what we're rallying from. We're coming from the daily. Boom, boom, boom. So we're bullish. All right, let's go back down to the 15-minute. So we come down, take out sell side right there. Right, come down, take out sell side. We already dealt with this Bissy over here, and then we push back up and we get close above that 1245 SIBI right there. Since we are bullish, we are wanting this to become an inversion fair value gap. When does this become an inversion fair value gap? This becomes an inversion fair value gap when we come back up and get us a closure above that price right there. So this price, this low of this candle is 47.8850. The closure of this 130 candle is 47.8850, right on the line. You can, for hindsight, you can be like, it worked, but guess what? You don't have a closure above yet. So you don't want to use hindsight and jump the gun. You want the closure to be above. The closure comes in right here on guess what candle? Now, I didn't make y'all. I ain't making this up. I'm just coming in and going through the price. But that is the 2 a.m. 15-minute candle, and we get a closure above this 1245 in fair value gap there. We're wanting to be a inversion fair value gap. Now, we came into the 2 p.m. Bissy, at 2 a.m. Bissy off of a 2 p.m. SIBI. And so now we're coming into the 2 a.m. candle, and we're looking for our opportunity to get long, because we're looking for it to it's been reacting off the 2 o'clock, 2 o'clock, 2 o'clock, 2 o'clock, 2 o'clock. And now right here, this so happens to be the 2 o'clock 15-minute candle. I wasn't even looking for it to be on the first 15-minute candle. I was just looking for an opportunity inside this from 2 o'clock to 6 o'clock. But there's the closure above right there. All right. So now that you got that closure right there, you can say this is going to be my price that I buy. Right there. That's my price that I buy. 47.8850. Why? Because that's the high of this SIBI. That's the first touch of that SIBI. When you come back to it, you're looking for that to be an inversion fair value gap. That's your buy there. Your stop loss will be below the swing low that contains that SIBI right there. So we're going to make this, to make it differential, let's make this black and dashed. And we're going to say this is the entry price. This is your entry price. Put that on the left. I mean the right. Gonna put that on the right. Entry price. Make that green because it's the entry price. And then we're gonna come down here. The swing low below. Y'all know I don't like to go right on the swing low. I like to give it at least a point below the swing low. So we're gonna put this at 84.55. 1 point below the low. I always like to go. I don't like to go right at the low. You can go right at the low if you want to, but I like to go 1 point below the low. That's how above the high. That's how I do my stops. All right, stop loss. I can spell. You put your stop loss there. Now, with the benefit of hindsight, now you can see you would have got picked up on this 215 candle, because this 215, once this closed, that opened, this 215 candle came down and it picked you up immediately. Look at the bodies of these candles right here. Every candle before this pop, it respected the body of that inversion fair value gap. Every single candle. That low, that body, that low. That one dipped below a little bit. That one dipped below a little bit. But all the bodies respected that. And then we popped off and rallied, creating a bullish break in market structure. So now, if you don't trade the inversion fair value gap, there's, for the London session, there's your bullish break in market structure, right? You got a bullish break in market structure. Taking out buy side. We got a bullish break in market structure. Right? You'd be like, Tim, I don't trade inversion fair value gaps. That's fine. You got a bullish break in market structure here on this 330 15-minute candle, right? And then it comes back down here into this down close candle there. Let's go lower and see what it's giving. Let's go, matter of fact, let's go higher and see if it's giving us anything. Because the 15-minute, like every time frame ain't gonna have all the PD arrays. And that's why, like, it'd be setups happening every day, but you just have to be in tune with the right time frame. You got to be in tune with the right time frame. Okay, so all right, come on the hourly. At this time on the hourly, there's nothing like that stands out very apparent. On the 15-minute was okay. Here we're getting better. We're better now. On the 5-minute, you have a clear fair value gap right there. For those who don't trade inversion fair value gaps, right? Boom. On the 5-minute, you got your break in market structure, and you retrace back down into the 5-minute fair value gap right there, close to the prior low that we had just swept. Now we just swept this low, so you're not expecting price to go lower than it. And does price go lower than that low? No, it does not. It does not go lower than that low. Comes back to the 5-minute fair value gap and stops at the low on a dime. On a dime. Stops at that low on a, let me turn my fancy dancing on for y'all. On a dime. Right? Boom. Takes that and then launches off again. Right? Launches off again. So there's how you would use that knowledge on during the lunch. Now let's go back for anybody that I lost. Because I know I said a lot. We're going to go back for anybody that I lost. All right. We were bullish at the beginning of the week, and we wanted to get long off of this daily fair value gap. This daily fair value gap, it came into it at the 2 o'clock 4-hour candle. We didn't get an opportunity to trade. We missed our opportunity on Thursday. Right? This the narrative we're making up, because we decided we was going to go into Friday's price action to look for a trade. So Friday, when it came in, the information that we had from our weekly analysis is that on Wednesday, the 2 p.m. 4-hour candle traded back into a 2 p.m. BISI, right? And created a SIBI. So you got a 2 p.m. candle that traded into a 2 p.m. PD array and created a 2 p.m. PD array. So a 2 o'clock candle traded into a 2 o'clock candle that had a PD array and created a 2 o'clock PD array. So at 2 o'clock on London, we started looking for any signs of getting an opportunity to make a trade in relations to this 2 o'clock SIBI, right? So we're looking for opportunity at this time to trade to the top of this SIBI. We're looking for opportunity to completely fill, because if you look here coming into there, we have not filled this SIBI right there. We're looking for an opportunity to attack that 2 o'clock SIBI, because on this day, the SIBI is here. The low of the SIBI on this day that we started looking to trade is at 47.9825. The entire SIBI, yes, is here, but we have traded through this part of it. So on this day at 2 o'clock a.m., we're in proximity of touching that 2 o'clock PD array. So we're looking for our opportunity to trade and attack that PD array, right? And so we went all the way into price, and I just gave 2 examples of entry models that you can use to attack this PD array, right? We used an inversion fair value gap, right? And we started at the 2 a.m. candle. We saw opportunity to get in on an inversion fair value gap, and there's our stop loss down there. I forgot to put the entry for the other one. Entry price, inversion. I just put IFVG. Inversion fair value gap, right? And then this down here on this 5-minute, entry price, fair value gap, 5-minute. Right? And we gave 2 examples of how whatever, like I only gave 2 models. I don't any other model that you got, but you see we're looking for our entry model to set up during the kill zone based off the information that we have collected from our analysis about what price has been doing. Yes, this is some rabbit hole stuff. You don't have to go this deep into the rabbit hole stuff like that. But when you have your analysis and you have your PD arrays and you have your targets, now you can use the opportunity, just like here on Thursday, Wednesday, and Thursday, we didn't get an opportunity to trade back into the rest of this, because on Wednesday we was trading into the whole SIBI. Thursday we was trying to get an opportunity to trade into a partial bit of the SIBI, and then Wednesday we looking to trade into some more of the SIBI. I mean Friday we looking to trade into some more of the SIBI, right? So, and as you see, during the London kill zone, the price, you never got stopped out. Price doing his job, is doing his job, right? And then during the New York kill zone, right there you go again. There you go again. During the New York kill zone, that's on the 8:30 candle there. During the New York kill zone, we pull back down and we come back down one more time into the same area there. We came here to, whatever. I don't feel like going to look for what we look for. Y'all already know how to do all that. Came back down. We got an order block right here that we traded back down into. See that order block there? Came back down, wick back up. You know what I'm saying? Whatever way you want to look at that, we came back down to that same area and then all the way up and did what? Closed out the SIBI. Closed out the SIBI right there on that candle there. Closed out the SIBI on that candle right there. Now, let's go back to the 4 hour for a second. And then yada yada yada, you'll do the same thing inside the New York session. You're looking for a reason to get long. So you got a reason to get long during the London, took you all the way up there. And then New York, it came back down. And then in the afternoon, it came all the way back down and took out the sell side of the London, right? Took out the sell side of the London. Look at this. It didn't touch that stop loss, even if you were still holding it. It made your duty hole pucker. It made your duty hole pucker, but it didn't touch the stop. But you would have been out by then, right? It came back down, took out that sell side again, and then this is after the close. But you didn't have, you didn't have an opportunity to get long for much during the New York unless you trade before the 9:30 open, right? And then you got an opportunity if you went down maybe to the 1 minute for like an afternoon long trade or something right there. But the New York, it wasn't really giving anything based off of this scenario that we pulled up. I'm not going to sit here and try to pick through straws and say like, hey, if you would have did this, is not a beautiful long setup in the New York. I'm not going to be that guy that says, hey, if you would have did, because I wouldn't have been trying to take this during the New York, especially after from the London to the New York kill zone, and we went up and we took that out like right at the 9:30 open. What's this right here? Yeah, right at the 9:30 open, we went up there and took that out. We took it out at 9:30 right there, boom. You know what I'm saying? The trade was when the kill zone opened up and then taking it into the open. So I ain't gonna pretend like you could have got long over here. I'm not that guy. But that is how, hopefully I didn't confuse anybody, but that is how you take your analysis and you take where you are pretty sure price is going to go, and then when time meets price, it comes into your kill zone. Whatever time you trade and you say, hey, this is what price has been doing, it's coming up on this time, let me look for my entry model now. If your entry model is not there, it's not there. The next kill zone come up, let me look for my entry model now. If your entry model's not there, it's not there. Just like today, I told you my entry model wasn't there. I was looking to get a long and my entry model was not there. It didn't give me my looking at these 15-minute candles right here, right? This is today's price action, right? Let's get into what 9:30 right here. This is the 9:30 open here. We rallied up, taking out the buy side, but if you look in here, we got an imbalance way down here, right? And then let's find midnight. Midnight should still be marked on my chart. Where's my midnight? See that 15-minute fair value gap that I marked out right there? I marked it. That was the only imbalance that we had, right? Right at midnight. So I said, okay, price dropped back down there. I'll try to get long. Price never came back down there. We took off, consolidated in this area, right? Throughout lunch from 10 o'clock up until after lunch right here. We kind of made our way up, took out the high and blast off, pulled back in. It never gave me my entry model that I was looking for. That's why I said it didn't. I had the information of wanting to attack this high, but it didn't give me my entry model during my kill zone. So that's why I say I didn't have a trade today. But hopefully all of this that I said about how to actually use it helps you. And price is fractal. Price is fractal. So you can do the same thing on daily charts, weekly charts, monthly charts, any chart. You got your PD arrays that you're watching. When price gets into the proximity of your PD arrays, then you start looking for your opportunity, right? You start looking for your opportunity. And notice when I didn't say when price came down and touched the PD array, I just jumped in. No, when price came to the PD array, I started looking for the entry model, right? We swept sell side and then went back up, got a break in market structure and retraced back to the imbalance. We swept sell side, we created an inversion fair value gap and entered off the inversion, right? It's like we taking the sell side to go up. That was the entry model that I was, that was part of the entry model that I was detailing here. I wasn't just saying get in when it hit. Oh, it's 2 o'clock. Let me get in. No, it was reacting off 2 o'clock PD arrays. So when the 2 o'clock 4-hour candle started, we started looking for opportunities. This time it just happened to start right. We got the opportunity right at 2 o'clock. Whew, I've been talking a lot. I've been on here for 50 minutes. Do anybody got any questions for me? Is anybody still on Twitter? Oh, somebody's still on Twitter. I'm surprised. Somebody's still on Twitter. Do anybody got any questions for me? What's up, Michelle? Michelle, when you slid in here, Michelle? 7:30? Oh, Michelle, you've been on here for 21 minutes. What's up, Michelle? How you doing? How was your Christmas, Michelle? How was everybody's Christmas, matter of fact? How was everyone's Christmas? Don't need that. Ain't nobody got nothing for me? No questions? No questions, family? All right. Guess I'm going to go ahead and put my chart together. Get my chart. Great. That's good, Kim. You had a great Christmas. That's good. You say you got to run it back. And Father Led said, I got to run this back. Father Led said, I got to run this back. Hey, great Christmas. Hope you're... Yes. You want to know here yesterday when I showed our pictures, Michelle? Let me show Michelle our pictures. Me and La Familia was hanging out. My mom and my sister came through. My mom and my sister, her kids and one of her grandkids, they came through. We this is me and my family. This is our ornament picture for 2023. We always have, y'all can't see them in the background, but yeah, there's one right there. We take a family picture every year and put it inside of an ornament, and that's the 2023 ornament right there. That's blank. That's one of them there, and yep, that's 2022 right there. That's the one inside the and that's the 2022 ornament. But we take one every year, and then this is our ornament. This was our ornament picture for this year. And then my sister and her kids came. That's my kids being kids. Me and my sweetie. No, that's my sister. And then two of her kids. That's my niece. That's my niece's daughter right there. That's my other niece. And then she got one more son. My nephew. He's in Florida. So she came up. She came up with her daughter, and then all of them came over here. Cause mom stay in Columbus now. And then that's me and me madre and my sister. That's my baby. That pumpkin. You see her with that silk on. You see pumpkin with that silk on. Yeah, man. Yeah, so and that's her and her grandbabies. That's a great grand right there, actually. Grand, and a great grand. Yep. They was trying to put her out. Talking, no, you can't get in with the grandbabies. I said, let my niece get in there. Talking, you are not a grandbaby. You're a great grand, trying to kick my niece out the picture. Yep. Miss Sweetie and my sister. Yep. So, but our you watched the replay. What's up, man? I hope you enjoyed your Christmas there. Goodard. Hope you enjoy. You looking forward to the inversions video, Michelle. Hope you enjoyed your Christmas, Goodard. Tell the wife and Vic and the daughters. I don't know your daughter's name. I just know Vic. And tell your wife and Vic and the daughters I said Merry Christmas from your best friend in the world. Tell them I said that, Goddard. Yeah, I like that tradition too. It's fun. We was playing a game yesterday, picking up cups, doing like the head, shoulders. I'll probably be updating my charts, doing the head, shoulders, knees, and toes, and cup. I was victorious. They couldn't see me. We had to take it to the replay with my son. He was trying to snow me, and when we went back to watch the recording that we did, we went frame by frame, and then he realized that I had scooped in and grabbed the cup, and his hand was just on top of my hand. Cause we came up, I got the cup in my hand. I got the cup in my hand like this, and he's holding my finger like this. I'm like, the cup in my hand. And so we went back frame by frame, and he could see that my hand clearly hit the cup first, and his hand was on top of my hand. And so I beat him out, and then I beat my niece my great niece. I beat her out, but once I was victorious and I won the gift card, I was gracious enough to give the gift card to my great niece because I didn't want the gift card. I just want to redeem myself because I lost the first game when they blindfold. They didn't tell me the instructions, and then they blindfold me and told me to scoop up bowls with a spatula, bowls like present bowls with a spatula that's flat, and put them into a container. And I was blindfold, and I only put two bowls in the put two bowls in the container. And so once I was victorious, I gave the $20 gift card to her. I gave it to her. I said, "Here, for being a great sport." Everybody, I beat everybody in the house. Yes, it was very competitive. Are you in the holiday spirit, or are you feeling the holiday spirits? Very competitive. Me and my whole family are very competitive. My sister did, hey, she not in there. My son right there, uber competitive. Christopher, most competitive person you'll ever meet. Timothy, highly competitive. Amanda, Eric, highly competitive. I don't know about Sim. Highly competitive. My sister, this woman right here is one of the most competitive people you will ever meet in your life. My whole family, we are highly competitive, and we have no mercy on age. If you're young or old, feeble or healthy, we give no mercy. Dog eat dog. You hear me? For our charts, we got a 4-hour Bissy right here, created on the 10 a.m. candle. Created on the 10 a.m. candle. We got a 4-hour Bissy right there. After taking out buy side, had displacement up, took out buy side, took out that buy side. All right. You will want to be watching how price reacts on a 4-hour basis to this Bissy. All right. We have taken buy side here. If we are to take this buy side, you don't want to see a 4-hour closure below this Bissy right here. All right. You don't want to see a 4-hour close below this Bissy right here. So now this is the 6 p.m. candle, right? So between 6 and 10, this candle that we're making right now, we're going to be creating a 4-hour candle, right? Then this Bissy here was created on a 10 o'clock candle. So when it's 10 o'clock 4-hour candle starts, you really want to pay attention to what price is doing around this time. I don't trade during that time because it's during the Asian, but you want to pay attention to what price is doing around that time, because you probably will still be in close proximity of this 4-hour fair value gap. Now, off of the rabbit hole stuff, you don't want to see, if this high is your target, you don't want to see a 4-hour closure below this fair value gap right here. You want to see this support price and keep price up, right? Because we traded here, we expanded with displacement and took out that high. So the job of this 4-hour Bissy and this 4-hour order block right here, right? Their job, and this is a 4-hour breaker. So you got a breaker, you have a 4-hour breaker, a 4-hour order block, and a 4-hour fair value gap, all in confluence, right? So you don't want to see a close below this. You want price to come here and rally off of that if that 48.60 is your target. Based off of that, that's how you want price to play out. God, dog it, I keep hitting my guns. Okay, so that's how you want to watch that 4 hours, 60 minute. 60 minute, no imbalances above this 4-hour. We do have a 60-minute imbalance down here, but since we got a higher time frame imbalance above it, you do not want to see price get all the way down here. Now, price can wick down and take this out, and then still close inside this fair value gap and be valid. You have a higher time frame above it. This is the one on the 4-hour basis. You're looking to see what happens. So in a span of 4 hours, you can wick down here, take this out, and then still close inside there. So keep that in mind. But there is a 1 hour Bissy here made on the 9 a.m. candle. So, but since price has gone up so far, you don't want to see it slide back down just to come get this. Since price has been real choppy and just not really giving a lot, it could very well come down here and rebalance that. Matter of fact, it would realistically be a good thing to come all the way down here and wick to it and then close back up there. I wouldn't be mad at that. But since it's so far down, not really wanting to see it. Because if you run a fib from that low all the way to that high, the 4-hour fair value gap is in the discount. Right? It's in the discount. So you don't need to come all the way down to get down there. That fair value gap is lower than 70% on the OTE retracement. That's a deep discount. Don't need it. You can come down here and get a 62% retracement and still hit the breaker, the hourly breaker, 4-hour breaker. Remember, it's a 4-hour breaker here. There's an hourly breaker there, 4-hour fair value gap. You get a 62% retracement on the OTE right there and still fulfill all that other stuff. So, yeah, that's kind of stuff you want to keep in the back of your mind. Just understanding all of the aspects of the concepts, it help you make decisions on what you want to do. And then anybody who like to trade against the grain, you can also use these as targets. Like you be like, hey, I don't want to wait for price to come all the way down there before I trade. You can short it down to there. You can sell it down to there. Just sell it down to that point. Look for a short setup up here and then sell it down to that point. No harm in that. Anyway, I ain't gonna go no lower than that. That's all I'm gonna mark out. Ain't a lot of market to be done. Price ain't doing a whole lot. Hopefully y'all got something out of me breaking down how to actually use the analysis to formulate, to look for an entry model. If the rabbit hole stuff was a little bit too much for you, I think very deeply. I think very deeply. Who on here old enough to know where I get that from? Who on here old enough to know where I get that from? Hey, man, that's all I got, man. I appreciate y'all for hanging out with me. Been on here for 1 hour and 3 minutes. You could have been anywhere else, but you chose to be here with me. Hey, man, if y'all want me to bring back the overnight price action videos and stuff like that in the new year, let me know, man. Let me know. I really miss doing the overnight price action. Really miss doing the stuff like that. Let me know, man. Anyway, y'all be safe out here in these trading streets until the next time I decide to jump on Al Gore's internet and share my thoughts with you. Enjoy the rest of the evening. It's your boy, Aranya Grande, a.k.a. Big Spider. I'm gone, man.